91 companies didn't pay a dime in federal income tax in 2018, according to that new report from the Institute of Taxation and Economic Policies. Fortune 500 companies avoided $73.9 billion in tax under the first year of the Trump Tax Cuts and Jobs Act. Joining us now is one of the authors behind that report, Matthew Gardner, and Yahoo Finance's Kristen Myers is with us as well. And Matthew, let's start with this report. The headline makes us all gasp, but then the counter sometimes is that, well, these companies do pay taxes. It's just not the federal income tax, but they pay a Social Security tax and they pay into Medicare. What do you say to the critics who say that perhaps when we talk about your report in the headline, we're missing something? Or are those critics missing something?
Well, we all pay many different kinds of taxes. The difficulty with that argument in this case is that there is one principal tax that profitable U.S. corporations are supposed to pay that represents the lion's share of their contributions to help pay for public investments. It's the corporate income tax. And so when you see a small number of the very most profitable companies avoiding all involvement with this principal tax, that's a real problem for the U.S. budget.
Matthew, talk to me about how this has changed over time, because I know your analysis in this report focuses specifically on the latest changes to tax law enacted by President Trump. But I mean, it seems like it's a pretty old problem that corporations have been taking advantage of loopholes.
It's a very old problem. What has not changed is that companies now, as was true 2 years ago, 10 years ago, appear to be avoiding any tax on about half of their income overall. Whatever the legal tax rate is, the effective tax rate, that is their overall tax as a share of their profits, pretty much half of that. That was true then, it's true now. What's new now is that we have a statutory tax rate, a legal tax rate, that is way below what it's ever been in modern U.S. history at 21%. This is the result of the 2017 tax cuts engineered by Congress and President Trump. And the hope a lot of people had, those who want a sustainable corporate income tax, was that this reform, as it was called in 2017, would do two things. One was to lower the rate, but the other was to broaden the tax base, getting rid of loopholes, so that whatever the sticker price was on the corporate tax rate, whether it was 21%, the 15% that President Trump wanted, or the 35% that it was before, companies would actually pay it. And so pretty clearly that has not changed. Companies are still finding ways to avoid much, if not all, of the tax they ought to be paying.
So, Matthew, how exactly are companies able to avoid paying taxes on their income?
The first thing to say about this is that it appears to be entirely legal. It appears to be the product of tax breaks that Congress has enacted over time at the request of these same corporations. There's no indication of legal wrongdoing. Tax breaks for capital investment appear to be a big part of it. Accelerated depreciation, which got expanded to something called full expensing in 2017, letting companies immediately write off the cost of their capital investments, appears to be a major driver in these results. There's a tax break that allows companies to write off the cost of executive stock options, which for many companies is big. R&D tax credits. Tax breaks for producing alternative fuels, tax breaks for producing conventional fuels. You know, there's a whole host of tax breaks in the code that collectively have this pernicious effect of substantially reducing the taxes paid by the most profitable corporations. I think it's important to add that this doesn't exonerate these companies from wrongdoing, the fact that they're using legal tax breaks. First, many of the same companies, Amazon, Facebook, Microsoft, Apple, have been accused and are currently embroiled in legal suits over what appears to be illegal tax actions offshore, shifting their profits to other countries. This is not that, but those allegations are still out there and are still being investigated.
All right, Matthew Gardner, Senior Fellow at the Institute of Taxation and Economic Policies. This is going to get a lot of discussion, especially with us heading towards an election. We appreciate your being here and hope you can come back.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.